All right, let's do this. We are about to crack open a 40-year-old time capsule from one of the greatest investors ever. And you know what? Hidden inside is a lesson that might just be more important today than it was back then.
So just think about this for a second. What if the real secret to navigating our own crazy, uncertain times wasn't in some newfangled algorithm, but in a dusty old letter from the past? Well, that's exactly what we're going to find out.
Okay, let's fire up the time machine. The year is 1980. The Cold War is still very much a thing, the world economy is sputtering, and yeah, disco is on its last legs. This is the world where Warren Buffett is sitting down to write his annual letter to shareholders. And here is the big, scary monster in the room. Inflation at a jaw-dropping 13.5%. I mean, that's not just a number, it's a destructive force, quietly devouring everyone's savings and making a mess of every financial calculation. So as you can imagine, the mood on Wall Street was just pure, uncut fear. Investors were basically running for the exits, totally convinced that owning stocks was the fastest way to go broke. But while the world was panicking, Buffett was calmly typing out a masterclass in how to see things clearly. And right here is where things get really interesting. Buffett kicks off his letter by dropping a bombshell. He says that the main tool everyone uses to figure out what a company is worth, its reported earnings, is basically an illusion. It's just not telling the true story anymore. So what are we talking about here? Reported earnings. It's that bottom line number, right? The one you see in every quarterly report. But Buffett says that in a world with runaway inflation, looking only at that number is like trying to navigate the ocean by only looking at the tip of an iceberg. The real danger and the real opportunity is hidden just beneath the surface. And there it is, his incredible metaphor. He says that for his own company, Berkshire Hathaway, what's being officially reported is less than half the real story. Think about that. The true value, the real engine of the company, is completely invisible to most people.
So let's actually look at this iceberg. The little tip that everyone can see, that's the dividends a company pays out to its shareholders. But that huge, massive chunk of ice underwater, that's the retained earnings, all the profit the company keeps and plows back into the business to grow even bigger. And that, Buffett tells us, is where the real value is hiding.
Okay, so understanding this accounting sleight of hand was one thing, but Buffett saw an even bigger, more sinister enemy out there that was quietly wrecking the finances of millions of people. This is, hands down, one of my favorite Buffettisms of all time. He just cuts through all the complicated financial jargon with a simple story about hamburgers. Look, if you invest your money, and at the end of it all, it can't buy you at least as many hamburgers as when you started, you haven't actually made any real money. Simple as that. The number on your statement might look bigger, but as he says, you won't eat richer. And that's the whole point right there. That 13.5% inflation was acting like a giant, invisible tax on everybody's money. It was a thief in the night, and most investors had no idea they were being robbed. This chart just perfectly illustrates the trap. So picture a fantastic business, earning an amazing 20% return. Great, right? Well, after the government takes its share in taxes, you're left with 10%. But wait, in a world with 12% inflation, you've actually lost 2% of your buying power. You are literally running faster and faster on a corporate treadmill, only to end up moving backwards. So that is the million-dollar question, isn't it? When you're up against these two massive problems, what in the world are you supposed to do? Well, Buffett didn't just complain about it. He laid out a very clear two-part strategy to win. First up, you have to own businesses with what he famously calls an economic moat. We're not just talking about a good company. We're talking about a fortress, a business that has such a strong, lasting advantage that competitors just can't touch it. And his number one example in the letter was Geico. So what was their moat? Well, for one, they were obsessed with being the low-cost provider. Their business model was basically impossible to copy, and they had brilliant managers who knew exactly where to put every single dollar to make that moat even wider and deeper. It was, in his words, the best of all investment worlds. But here's the kicker. Just owning a great business, it isn't enough. The second part of the solution is a mindset. It's about having the guts and the humility to see the world exactly as it is, not how you wish it would be. No, check this out. It's what makes Buffett so different. He's not just tooting his own horn about his wins. He's right there, in public, admitting to a huge, costly failure with his old textile business. That kind of intellectual honesty, that willingness to say, I was wrong, is what separates the legends from everybody else.
So there you have it. When you boil it all down, the blueprint from 1980 is actually pretty simple, but it is incredibly powerful. Find a corporate fortress, and then make absolutely sure it's being run by generals who are both brilliant and honest.
All right, let's get to the single most important takeaway from all of this. If you remember only one thing, make it this. It's not about how much money a company earns, it's about what the people in charge do with those earnings. That is the billion-dollar question.
And he leaves us with this final, really profound thought. It doesn't matter if you own a tiny sliver of a company or the whole thing. It doesn't even matter if you're the one calling the shots. What truly matters is the quality of the decisions being made with the company's money. In the end, that's what creates real, lasting value. It was true then, and it's true now. So the question for all of us is, are we paying attention to the right acts?